We are actually recommending all of them. Google with a strong buy, Netflix, Amazon with a buy, as well as Facebook. So I think right now, given the concerns with the global trade fears, seems like the market is desperately looking for some type of leadership. I think the FANG stocks are well positioned to step into that role as we look at it next year.
How much of the FANG momentum over the past few months is driven, in your view, by sort of automatic buying on the parts of index funds or ETFs that just sort of, as those attract money, they are big constituents in those funds and ETFs, and therefore money is attracted into those stocks?
There's no question in our mind that there's momentum that's underlying some of the acceleration that we have witnessed in these FANG stocks, as you implied in your question. But even beyond the momentum, I think the question around valuation comes up now and then. If you look at the fundamentals, for example, the FANG names are growing revenues still multiple times above the S&P 500, as well as EPS growth if you exclude the energy sector. So I think it really speaks a lot to the underlying strength in the core businesses. Even Google, for example, Alphabet, which is perceived as the most mature of these names, is still growing revenues consistently north of 20%. So it really speaks to what we believe will be the underlying catalyst that will continue to drive the shares.
Drilling down on Amazon, Tuna, in terms of the online sales ruling that we got yesterday, what impact, if at all, do you see it having on Amazon? And I'm curious as to whether or not you think Amazon could actually develop a new revenue stream by offering tax collection services to its third-party sellers who now have to, or could, have to collect tax in the various states.
Well, so we put out a note, Melissa, yesterday following the ruling. I think on the face of it, the ruling would appear to raise some concerns for Amazon being by far the biggest e-commerce player. But as you parse down, underneath, Amazon, as a matter of fact, is already collecting sales taxes in a substantial majority of states where it qualifies for taxable status. So I think the impact of that ruling will be muted, relatively speaking, compared to some of the smaller online players. And that's why you see the shares have not been adversely affected. On the other question as to whether it could, kind of sig into the collection role, that has not been articulated. Although we think that is not that's somewhat of a distinct, longer-term possibility at this point.
Tuna, how does it all end? I mean, so momentum is tremendous, and you're on this sector that is so hot. But at some point, something turns. What is it, do you think, that eventually might slow these stocks down as a group? Is it interest rates? Is it something else that's hot? What?
Well, if I can point to one common factor or overhang would be the regulatory risk factors. But even that seems to have played out without much damage to these names. Whether it's the Cambridge Analytica issue that investors seem to have shrugged off so far, or even the, President Trump's tweets regarding Amazon. I think this is a group that just seems to shrug off any type of major concerns. The trade fears also being the latest example, where I think fortuitously for the group, it just seems like they're relatively insulated from all of these fears, whether it's China, Mexico, Europe, or Canada, as a matter of fact.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.